Let's get started for another great workshop. Hello, everyone, and welcome to Main Street Launch's third of six webinars in the Business Finance 102 series, a workshop series that covers the what and the how of business finance. Today's workshop continues our six-part series and is titled Bringing It All Together. On behalf of Main Street Launch and all our internal partners, we would first like to thank our funder, GoBiz, who has made this series possible. We would also like to thank our partners, Wells Fargo and the National Black MBA Association, San Francisco chapter, for their support with this series. Moreover, a special thank you goes out to our partners and co-sponsors of the Business Finances 102 series, the National Coalition of 100 Black Women Incorporated, Oakland, Bay Area chapter. Before we get started, a few housekeeping rules. We will be recording today's session and will send out a recap and recording shortly after the conclusion of the workshop. We will have everyone on mute to keep the background noise down, but we do encourage questions, so please submit them using the chat function. We will do our best to get your questions answered during the session. We will also be holding a Q&A session at the conclusion of this workshop to answer as many questions not answered in the chat. This is where more of the how happens, so ask away. We will also share a link for a quick survey at the conclusion of this workshop and would greatly appreciate it if you all could complete it. Information gathered will be used to enhance our workshops in the future and get an idea where businesses in our community currently stand in regard to these trying times and what other needs are there. Moreover, we will also be sending participants hailing from Stockton and San Francisco an additional separate survey at the conclusion of this workshop for city-specific inquiries. Filling these surveys out helps ensure we have a voice in our community and the necessary data is provided to our leaders. So thank you in advance. All right. So now, for those of you who are not familiar with us, Main Street Launch is a 40-plus-year-old CDFI, also known as a Community Development Financial Institution, headquartered in Oakland, California. Our mission is to create economic opportunity by empowering entrepreneurs. Through innovative partnerships, we provide business owners with the capital, education, and relationships that allow them to flourish. Our collaborative approach helps our borrowers create jobs and stimulates economic development in low to moderate income communities. My name is Richard Morris. I've been with Main Street Launch for 2 years and currently the Assistant Vice President, Senior Program Manager, supporting the management of the African American Entrepreneur Institute, an initiative of Main Street Launch along with other special projects and lending programs focused on African American entrepreneurs in Stockton, Oakland, and San Francisco, California. And I will be your host today. Joining me as co-host and panelist is Shemaine Wolford of the National Coalition of 100 Black Women Incorporated, Oakland, Bay Area chapter. Shemaine?
Hi, everybody. It's good. Well, I can't see you right now, but it's good that you have logged on today. As Richard mentioned, I am the third vice president of the National Coalition of 100 Black Women, the Oakland Bay Area chapter, and I want to welcome all of you here today. I know I say this for every webinar that we have, but I am super excited about what you're about to hear today because it's so beneficial and needed in our community. We have two wonderful panelists today, and you guys, take notes, get your notebook out, your computer out, your laptop, whatever you use. Make sure you take notes because this information you cannot pay for, and you're going to receive it right here today. So a little bit about the relationship between Main Street Launch and the National Coalition of 100 Black Women. I am a graduate of Main Street Launch's Entrepreneur and Training Program. I was one of two participants in the second cohort. Since then, the program has grown, and the 100 Black Women is a part of that growth. So we're very proud and very happy to partner with Main Street Launch. When I was an EIR, which is what they call Entrepreneur and Trainings participants, I had the opportunity to create a program, our Access to Capital for Women Entrepreneurs program, which the 100 Black Women, we actually host each and every year. This year, with this past year with COVID and everything else, we were honored to co-host with Main Street launch on this six-part series, and that's why we're here today. This is the third webinar in our loan readiness series. And, it has been a tremendous honor to just see how uh, people can build each and every week upon their knowledge. And I think that this is going to be like, the final nail. Is it the nail in the hammer or the hammer in the nail? But, this is going to be like that final push that you need to really start making a difference and trying to prepare to, get financing. Before I turn the webinar back over to Richard, I do want to acknowledge my coalition sisters because we acknowledge each other for all of the hard work that we do. I believe that our first VP over programs is on the call, Ms. Cheryl Perry Lee. We have our fearless economic empowerment chair, who's also a panelist, Ms. Frances Cohan today, and also my coalition sisters, my technology co-chair. Well, she's the technology co-chair, Ms. Tamari Richardson, and we also have a member of our Economic Empowerment Committee, Ms. Shelley Watson, on the call. And if I forgot everyone or overlooked anyone, please forgive me. I'm super excited, but I do want to acknowledge that without this work is not done by one person. It takes a group of people to do it. And, the women on the call, we are a 100% volunteer organization, and we are part of the organization because we love our community and we love African American women and girls, and we want to make sure that we set each and every one up for success. So thank you.
And that is awesome. Thank you, Charmaine. And, I did want to just add a little piece in there. She said, this information, you just can't pay for this information. Actually, it's in that line, but it will cost you a lot of money to sit down with some of the ladies on this panel to get this information in other places. So again, take notes. We're going to send out the recording as I'm going to go over, as well as the decks that we're going to present. So again, thank you all for being here today. And as we move forward, now getting to the reason you all are here. I'm excited to host today's webinar and would like to introduce you all to our two amazing and dynamic speakers, Michelle Adderley, CEO of Grossboro Financial Group, LLC, a company dedicated to coaching people on wealth management, asset protection, financial goal setting, and manifestation, hence fueling the masses to financial freedom. And Frances Cohen, who on top of being the Economic Development Chair for the National Coalition of Black Women Oakland Bay Area chapter, as Charmaine just so eloquently let us know, a sponsor of this workshop series, the 100 Black Women, is an experienced insurance professional with accident and health, casualty and property, broker agent, life and annuity licenses from the state of California Department of Insurance. As an insurance professional, her emphasis is on commercial insurance, business owners' general liability, workers' compensation, retirement planning, and annuities that will help her clients achieve guaranteed lifetime income. I hear intergenerational wealth transfer. First up, we have Miss Michelle Adderley. And Michelle, the screen is all yours.
Oh, thank you very much, Richard, and the panel for having me. I just pulled out my notebook. I was ready to take notes from Frances already. I was like, "Ooh, let's talk about the money. Let's talk about the money and the protection first." Thank you for having me. But I would really like to. I don't know, Frances, if you're prepared, but I think that what you're going to speak about is segue interestingly enough to me, because without the money, the protection, all the rest of the stuff that I'm talking about is a moot point. So would you like to go ahead and go first? You're on mute.
No problem, Michelle. I can go first.
Okay, awesome. Because I'm Frances. I'm here. I'm like, oh my gosh, let me take these notes because it's going to help in the segment when we talk about capital and the capacity.
Yes.
When we talk about insurance. So I think that yeah. So I'm going to go ahead and mute out and sit back and take my notes. I hope you don't mind, Richard.
Oh no, I don't
Hello,
mind.
everyone.
All of our information is very pertinent and flows any direction. So
Absolutely.
thank you so much for Francis jumping in there and great
Thank
recommendation.
you. Thank you.
Not a problem. Hello, everyone. I'm Francis Cohen, and I am a proud insurance agent. So, Richard, will you be able to pull up my presentation, or am I how?
You're on mute, Richard.
Let me go ahead and pull that up for you, Francis.
Okay. In the meantime, so I am just really excited about being here today. I've been to the other two workshops, and the information that has been presented. Oh my goodness. I myself am an entrepreneur, and as an insurance agent, I'm an independent insurance agent with FH Cohen Insurance. I want to talk a little bit today about business finance, and I also want to talk a little bit about the importance of insurance. I'm going to shed some light on commercial business insurance. I'm also going to talk a little bit about key man, key woman, key person insurance. And then I'm going to wrap all that up into buy and sell agreements.
It's coming your way. 1 second here.
No problem. So as an insurance agent, I have many entrepreneur clients, and I tell all of them, one size does not fit all. Insurance is based on your business, it's based on the category, it's based on the type of products and services that you're offering to your clients. So it's important for you to know that. It's important when you're going to sit down with an insurance professional. It's important for you to know, this is my business. These are the type of clients that my business services. Thank you so much.
Oh yes.
So your business insurance. So we can just go to page 2 or 3. I'm going to hit on the importance of insurance for you. And I know you're saying, oh, the insurance state, it's not about, it's really not about the insurance itself. It's about the protection for your business. And that's the most important thing. Not only the protection for your business, the protection for you as the business owner. It's also about you as the business owner having protection for your family, not just for your business. So that's the importance, to bring it all together, The importance of business. When people talk about business insurance, they use a number of terms. They say business insurance, commercial insurance, business owners insurance. And so I want to just kind of clarify just a little bit. One,
Oh, here we go. I
is
finally
business,
got it for you there.
okay, okay. People often ask the question, is business insurance required? Is it the law? So it's yes and no, but, okay. No, it's not required. Is it the law? There are some laws around some business insurance. There are some, okay? So today we're going to talk about the importance of it, what commercial business insurance is, key man, key woman, key person insurance, and then we're going to do buy and sell agreements. Okay, next slide, Richard.
Yes, oh, too far. Oh, 1 second, Francis is trying to make me go all the way to number 8 there. That's just skip. So let me go ahead.
So let's talk about business insurance requirements. Okay, insurance is available. And notice I use the word available to business owners. And it's available because what does it do for you? It's going to be there in case there are events in your business. They can be catastrophic, they can be natural disasters, they can be claims, they can be lawsuits. In most states, a certain amount of insurance, in most states, California is one of those states, a certain amount of insurance must be held for employees operating under your business, like workers' comp. It's a requirement if you have employees that you provide workers' comp. There's unemployment insurance and there's disability. In most states, those 3 categories are required. Some of these other categories are not required, but in most states, it's required that you have some of this type of insurance for your employees, okay? And as I said, you should choose your coverage based on the type of business. Choose your coverage based on the type of business. Next slide, Richard. Okay, don't settle for one size fits all. That's the important piece. Okay, you can pick and choose the type of coverage that you want. So when you sit down with an insurance professional, you have to be a little bit prepared to express what you're looking for and what your business is, what your products and your services are. And then you choose the coverage based on your type of business. Commercial business insurance. I'm just going to touch on that. It can be overwhelming. Okay. In the insurance business, we have different names that mean the same thing. Okay. So commercial business insurance, often referred to as BOP, business owner's policy. Business owner's policy can include many different categories. Today, I just want to cover some of the things I think you want to know about. There are a number of categories that you can include in a policy. You can pick and choose. Don't let anyone tell you that you can't. Okay, in a business owner's policy, one of the things that's in that is business property. Business property, many of you should know, it's whatever property you use in your business. So many people use technology in your business. Any of those things that you think are valuable, that would be a part of your business property. Included in that is business documents, business papers. So depending on business, many businesses offer products, some businesses offer service, products and service. That's the difference. Business liability or commercial liability or general liability. The terms, business liability, people call it commercial liability, people call it general liability. It's all three of them mean the same thing. Okay, it covers the liability of your business. And you say, okay, well, what type of liability? Liability risks, any risks that might come up in your business. And I'll go a little bit more into detail. This includes claims, any types of losses. Liability claims often mean lawsuits. We live in Sue Happy, California, just so you know. So liability claim, business liability is very, very important. Business income. So, business income, that's your revenue. Policies should include a replacement for your revenue for a covered loss. And we can talk about that. Next slide, Richard. Also included in a BOP or in any type of commercial insurance, business auto. If you have an automobile that you use for your business, any auto, an example I'm going to give is I have clients, they own dry cleaners, and many of the dry cleaners offer pickup and delivery. Okay, that is a business auto. That should be covered by business auto, not your personal auto. So if your current insurance carrier discovers that you're using your car for business, they're going to want you to add business auto. They're going to say, I'm sorry, you were using your personal auto for business, but you didn't tell us that you were using it for business. It won't be covered. So business auto is important if you're using your car for your business. Cyber liability and data breaches. These have been added because, as you know, this is a technology arena that we're in. Cyber liability for small businesses is going to be very important. Let me give you an example. You have a data breach. Some of your clients' information is breached. You're going to need some money to fix that. So you should make sure that you have some cyber liability coverage. I tell most of my clients, you need a minimum of $25,000 to $50,000 worth of coverage. That's a small amount, but you're a small business. As your business grows, you may want to have a little bit more coverage. Okay. So when you hear about a data breach, such and such, millions of clients' information has been breached. those companies, they have cyber liability insurance because they need it. You're going to need it to talk to a lawyer. You're going to need it in case there's some sort of regulatory penalties because you breached your client's data. And then there are certain states that have a specific privacy breach laws. California is one of them. So you would want to really find out about cyber liability and a data breach endorsement on your policy. Employment practices, that should be, if you have employees, employment practices, you can add that also to your commercial policy. Employment practices is going to cover any employment issues around discrimination, harassment, inappropriate employee conduct. Okay, that's an endorsement you can add to your policy. And I've talked about workers' comp in California. If you have employees, you're required to have workers' comp insurance. Workers' comp insurance really is a benefit for your employees, and it's going to provide them while they're off injured because they got injured at work. It's going to provide them with some sort of financial help. Next slide, Richard. Thank you. I want to talk a little bit now about.
Fred, I wanted to ask a quick
Yes.
question here. So
Yes.
we had a question come in about workers' comp, and the question was asking if they're the only employee. I did respond and try to get some clarification if they're W-2ing themselves, but if they're the only employee or they employ their family members, I think that might change the answer. Or should they move forward with obtaining workers' compensation insurance?
Okay, so workers' compensation insurance does not cover the business owner. That's number one. The insurance is only for employees. And if your employee is on the payroll, that's how they know that they're an employee and that you're not just trying to get insurance, get a claim for anybody. In order to use workers' compensation insurance, you have to have a payroll, and those individuals need to be on the payroll. And as you know, when you are on the payroll, you pay into workers' comp as well. Does that answer the question, Richard?
Yes, yes, it did. So I
Okay.
think you answered, as long as if you're getting payroll, W-2, you need workers' compensation, and it does not cover you as an employer. It just covers the employee in
It
case
only
they have a
covers
claim against you, and it's
exactly.
insurance against to protect yourself. And then we have another one that came in.
Richard, can
Oh,
I just
yes.
interject really quickly? Francis, can you just offer a little bit a point of clarity? So let's just say you have a company has they're a general contractor. They have payroll. They have, obviously they have workers' comp. The structure is an S corp. So the owner, the president of the S corp, is an actual W-2 employee of the company. So are you saying that, my understanding is that they actually have a choice. The owner has a choice to either add themselves to that workers' comp policy or to not add not add themselves to the policy. Are you saying that's a no, or are you saying?
Yes, I'm saying that's a no. Workers' comp does not cover the company owner, regardless. The workers' comp
Right.
only covers employees.
Even though, and I'm sorry, even though the it's a separate entity, and the owner is an employee of the entity.
So he still owns the company, Shemaine. No owner of the company can get workers' comp.
Okay, I just wanted to be clear.
Okay, I want to be clear too.
All right, and then and Francis, and so we can while we're moving on, there's one other question, a really good one actually. From my experience back in the solar days, when you have these contractors, right, or you are a sales agent, right, you're going out and selling on behalf of a sales and marketing firm or some other type of organization. You're using your own car, okay, and they get in an accident. You as a business owner, if they're working while even though they're in their personal vehicle and they're on the clock utilizing their personal vehicle to do work for your company, is the business liable for an accident by that employee in their own vehicle?
So what the words you used, Richard, was contractor.
Yes.
Okay, so I'm a 1099 employee and I use my car and I have an accident,
That's
it's
all.
on me, the
How about
1099.
employee? How about an employee though? An employee.
Okay, if we're talking employee on the payroll,
Yes.
okay, and you as the owner and the have agreed that the employee can use their car for business, that's something that you really have to discuss with your insurance company,
Yes.
because all insurance companies don't have the same policies and procedures. Okay, so here's what I tell my clients. If you have an employee and they're on the payroll, what you would want to do is cover them while they're working, not after work hours. And that's something that you can work out with your insurance company, okay? Otherwise, the employee is not covered. Does that make sense?
Yes.
So you can work out something with your employee, and typically that means a couple of things. One, if you have a company, then your company then would need to say, here's my employee, they're using their car, but I'm covering their policy. There are a number of ways that you can work this out.
All right, and in essence for time, we're gonna circle back to, we're gonna close out on some of these questions in our Q&A session at the end. These are great questions. I just want to give Francis the opportunity to keep going there. I think you're on slide 6.
Yes.
There you go.
Yes. So key man, key person, key woman insurance. They use a number of different words for this. At the end of the day, this insurance is for a person who is in your business. Let's just say it's you have either a partner or you have someone in your business that has significant responsibilities. Should something happen to that person, the business could come crashing down. That's how you want to think about this. This is how you want to think about key man, key woman, key person insurance, because this is a small business. Okay. Large corporations use this insurance as well. But in a small business, if it's just two of you, so let's just say you have a partnership, that's usually the owner and maybe one other person. That means that it's only the two of you for the business. If something happens to the other person, and that person is crucial to your business, you would want to consider key man, key woman, key person insurance. Okay. I'll talk more in detail on the next slide. Key man, key woman, key person insurance, really and truly, is life insurance. Okay. For key person insurance, a company, next slide, Richard, a company can purchase a life insurance policy on that person, and the company can be the beneficiary. So let me say it again. It's a partnership. And it's just the two of you, which means both of you are critical to the business. If something happens to your partner, that may be loss of income, loss of accounts receivable, just loss of that person, and the business may not be able to survive. So they created this insurance for businesses, specifically for small businesses. But as I said, large corporations use key man, key woman, key person insurance. In the event of the person's death, the company would receive the death benefit. So the company you would be let's just say your company, K&K Beauty Supply, would own the insurance policy. JoJo's Barbershop, and JoJo has a partner, and the two of them run the barbershop, and something happens to the partner, you would want to consider, you really would want to think about, and you're thinking to yourself, well, how would I know what to do around the face value of the insurance policy? That's definitely something that we can discuss. Face value of insurance policy. Let's just say you have a small business and your P&L tells you what the worth of your business is, really and truly. You already know what your cash flow is. So let's just say, your business is you got $1 million business. You really do have, you have sales up to $1 million. If something happens to your partner, you would need to have at least a $500,000 minimum policy on that person in order for you to be able to maintain the business, hire somebody, and the loss of income that you would be receiving from that partner. Okay, so key person insurance, it gives the company some options, really and truly, other than cutting back, and you know, as this says, bankruptcy. Often without key person insurance, sometimes the business can go under. Now,
And really quick, Francis,
yes,
that's huge. In the African American community, the business
yes,
community, I believe it's 98% of business owners are
yes,
one employer or less.
yes,
So if you fit in that line, let's say the owner is also the number one employee that
mhm,
brings in all the revenue. So a
mhm,
partner that is maybe there in support, or they are aware of the product that they're selling. If that person was to pass away, just to kind of reiterate, that key man insurance policy will help that business kind of
exactly,
get through those hard times, finding a replacement. There's going
right,
to be loss of revenue because this
right.
person meant so much for that business. So I
Mhm,
just wanted to kind of hone in on that. Thank you for bringing that one up.
mhm. And let me just add, for those of you that are a sole proprietor, you also may want to consider, having this type of insurance, because you are the key man, the key woman, or the key person in your business. You also want to consider this insurance for yourself. Number one, something happens to you, whoever, your family, your children, your clients, that funding can really help those that you have left behind, who needs to either close down the business, or they decide that they want to continue in the business. But in order to do that, they're going to need probably some type of funding, because you are the sole proprietor. They're going to miss your income. They're not going to have all of your contacts. It's going to take time for anybody to get up to speed, to step into your shoes. So you really would want to consider key man, key woman, key person insurance for yourself. Buy and sell agreements. Richard asked me to talk a little bit about buy and sell agreements. Buy and sell agreements go hand in hand with key man, key woman, key person insurance. Okay. A buy and sell agreement is a legal binding document. You need a lawyer to help you set this up. An insurance agent cannot, but an insurance agent can participate. Typically, lawyers contact insurance agents to say, I'm putting together a buy and sell agreement for my client, and they are interested in key man, key woman, key person insurance. That's the piece of the buy and sell agreement. Okay. These buy and sell agreements are used in partnerships and in corporations all the time. Okay. It's an agreement to safeguard the partnership should something happen to one of the partners. And you can also, if there isn't a partner, okay, let's just say you're a sole proprietor, you can also set up a buy and sell agreement with stakeholders. You can set up buy and sell agreement with your employees or with an employee group. Okay. And so that's something that some sole proprietors do as they move forward in their business. But a buy and sell agreement, it really serves the purpose to fund the business should something happen. Buy and sell agreement, you have to fund the buy and sell agreement. And you often do that with insurance.
And Francis, this one here is so important. You and your partner been buddies since elementary school.
Exactly.
But that doesn't mean that we like each other's spouses, our
Exactly.
brothers and sisters. So if something was to happen to your partner, your best
Right.
buddy,
Right.
that is who's next in line to take over as your 50-50 partner.
Mhm.
So buy sell agreement is the best of both worlds, right? It
Exactly.
provides the capital that's necessary to buy out this family member,
Thank you.
right? without
Yes,
you having to take it out of your own. And it's usually on a predetermined future valuation of some sort or some formula. So
exactly.
a buy sell agreement, amongst a lot of things, again, this is a helicopter view of this stuff. It gets really granular, but that is
Mhm.
a key component. And
Right.
that's something that we all should understand, that things happen, and you're not necessarily protecting your business, but you're protecting your partner's business, right?
Exactly.
And their family, right? So
Exactly.
his wife or her husband or what have you, or any situation, they might not know the business, right?
Right.
So as much as they want to support, they might be a little bit more of a hindrance and versus support. So a buy sell agreement can make everyone happy. So thank you for
Yes,
bringing
it
this point
can.
up.
It can, because people, so you have a partnership and the partner dies and the partner has a wife, then without the buy and sell agreement, your partner share can go to her or him or her. And as Richard said, that person can step in. They may not know enough. That it's going to take time for them to get up to any kind of level of the person who has just passed away. Okay, so the buy and sell agreement can be very important. I had a client, he had a comic book store, and he and his best friend from childhood had a comic book store. And the good thing is they had a buy and sell agreement. And when one partner was in a car accident, unfortunately, and passed away, they, because of that buy and sell agreement, that's how he was able to, one, the other partner's wife wanted to sell her share. She wanted nothing to do with the business. Without the buy and sell agreement, and next slide, Richard, and the actual funding of the buy and sell agreement, that's how he was able to buy out. And he is now the owner of the comic book store. So for a buy and sell agreement, there are three methods of funding, three different ways that you can fund a buy and sell agreement: entity purchase, cross purchase, and a hybrid. Okay. And as I said to you in the beginning, it's a legal document. You need to contact a lawyer to talk about and set up a buy and sell agreement. Okay. Um, so in the case of an entity, purchase partners use the business itself to take a life insurance policy. So the two partners, the comic store, they each took out a life insurance policy on the other one. That's one way you can do the funding. They funded it for $500,000 each. And that meant either you can do it, you can either you can pay for it, or you can have the business. So each partner can pay the premium, or you can have the business pay the premium. But at the end of the day, the beneficiary is the other partner, not the family, because this is a buy and sell agreement. So that that can happen, so that the business can continue. As Richard said, we're talking legacy transfers here. Okay. So the business acts as the owner and beneficiary of the policy. The owner and the beneficiary of the policy. Okay. So the one that I'm talking about for the comic store is the cross purchase agreement. Each co-owner takes the life insurance on the other co-owner, and they become the owner and the beneficiary. So Michelle and I are in business together, and we each take out a $500,000 whole life insurance policy. And I become the beneficiary, and Michelle becomes the beneficiary. Unfortunately, I love motorcycles, and I was riding on a motorcycle with somebody. Oh, we had an accident. There you go. And so for the business to continue without a blip, really and truly, these agreements are the reason that you can have legacy transfer.
And Francis, this is a great segue to a continuance of the workshop, and just want to give you a time check so we can make sure we get all the content in and
Yes,
leave some time for those Q&As.
yes,
But
yes,
thank
yes.
you. It's
I only have
very
two more
informative.
slides that I want to cover. Okay. Um, so now that's the buy and sell agreement. One thing the business owner, thank you, Richard, business owner. One thing the business owner often does not think about, because they're so focused on their business, their commercial insurance, their buy and sell agreement, key man insurance, they don't think about life insurance for themselves, totally separate from your business. So that's one thing I have business owners who say, yes, 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 I got commercial, I got this, I got that. And now I want to talk to you about life insurance, mainly because You're focused on your business. You're an entrepreneur. You trying to get your business going. You're getting your commercial insurance. You're getting everything that you need. And let me just say, often when I talk to especially entrepreneurs, it's important for you to have some commercial insurance. You don't have to have the biggest policy. And that's where we get into. So there's business owners, there's commercial, and then there's general liability. Often an entrepreneur doesn't need the whole business owners. Sometimes they just need a little general liability. General liability is going to help you with lawsuits. People, when you know, a chef and all of a sudden somebody gets a rash and they want to sue you, but you have general liability. You may not have the whole business owner's policy. So that's why I started off saying, you can pick and choose what you need, and then you can, as your business grows, you can add additional insurance. But for the business owner, you need to think about life insurance on yourself to protect your family. Okay, you need to think about health insurance. You need to think about long-term care insurance. Those are some of the things that you can think about. You also need to think about your own retirement, because many small business and business don't have any retirement. Okay, so you can't have a big 401k. You can't have some of these other things, but you can get a little Roth IRA for yourself to start. You have to start somewhere. And so I put some information about a Roth IRA. It is a retirement account. Okay, you can put, those of you under 50, you can save $6,000 a year. Those of you over 50, you can save $7,000 a year. That's baby steps to help you get to where you want to go. The second thing I think you want to think about as a small business, many small businesses feel like I cannot provide any type of benefits for my 2 or 3 little employees. Yes, you can. Okay, you, as a small business, you can get what I call portable life insurance for your employees. And I can talk with you about that. Portable means if they leave your company, they can take the life insurance with them. It's called self-funded life insurance for your employees. You can do that. And you can also set up self-funded retirement accounts for your employees as well. I think it's very crucial.
I know we might have to have a workshop on this whole section here on retirement, because being someone himself that is uninsurable at a very young age, portable life insurance, my wife organization actually just brought that on. I'm able to access that insurance.
Yes,
So portable life insurance goes through the business entity, which gives you group rates and access to that.
absolutely.
Right. So that's a great one. So we definitely going to have to circle back and have a workshop specifically on those items there. Thank you.
I'd be happy to present that to you. My last slide. Here's who I am, Francis Cohen. My contact information. I offer free consultations all the time. I think it's important for those of us in business to try to, for me, it's all about educating. It's all about educating, and I'm all about helping to educate small businesses. So here's my number, here's my information. Thank you, Richard. Thank you, Charmaine. You know, I could talk about insurance on and on. It's my favorite thing. Thank you so much. I'll be here for questions and answers.
And I think it's very, very important that you talk about life insurance, because that, oh my gosh, we insure everything. We insure our phones, we insure our cars, we insure everything, but we don't insure our lives.
Exactly.
And that's so very important for that.
Thank you.
Thank you. Thank you. And you said a key word that you said also when you said whole life insurance. And I think that most people have a tendency to get some of the other policies, some term life and whatever, but whole life is where that added value is. So thank you very much.
Added value. Term life is temporary insurance.
Yeah,
whole life is permanent insurance.
Oh my gosh. I mean, I'm reaching out to give you a virtual hug right now.
And life insurance also ensures generational wealth transfer. Let's stop starting over, but I'll be talking a little bit about that later. So
okay.
the mic is all yours, Michelle. And let me know if you have any issues with sharing your screen, or if you want me to try to find your.
Yeah, if you can go ahead and do that, Richard, I would greatly appreciate it. If you
Okay,
can
let me go ahead and find that deck. 1 second.
Right. Okay, in the meanwhile, while Richard is queuing that up for you guys, my name is Michelle Adderley, and I am from Miami, Florida. I am an entrepreneur. I've been in business for over 22 years. And most people say, oh, no, you don't look old enough to have been in business for 22 years. And I started when I was 3. Let me say that. I started at a very young age. No, I started after I retired for law enforcement for 9 years. I went into entrepreneurship. And what I did was, when I started my business, I didn't have any help. At this particular time, 21 years ago, we didn't have all of the, we had chambers, and I would attend these chamber meetings. And when I would attend the chamber meetings, I would just get chicken, I would get mashed potatoes, I would get string beans, but I didn't get any information that I could take and I can actually execute and apply. So I failed tremendously in the businesses that I started in the beginning. So I jumped out and I said, hey, I'm gonna start this business, and I'm gonna go and I'm gonna get an EIN number, and I'm gonna, apply at the state, I'm gonna get a bank account, and that was it, right? So that's what I said. I said, okay, I'm in business. But I was super excited about it. And that's the first slide would say, being a boss is not about just going into the mirror and waking up in the morning and saying, hey, boss, can I have the day off? Most people think that that's what it's all about. They think entrepreneurship that's what it's all about. Just walking in the mirror and say, boss, can I have the day off? And then your bank account and say, no, not today. Let's get back to the realistic thing here. So what we're going to talk about also today is being bankable. How I failed miserably to the point where I learned what I needed to have in order to be in business. So let's see, Richard, where are you?
I want to confirm. Can you guys see the screen, your deck, or no? Okay. Yes.
Yeah, I can see it. Okay, you can go ahead with the first slide. All righty.
There we go.
As I said earlier, so you wake up and you walk in the bathroom and you say, and I think I spoke to Charmaine about this one time. I said, you wake up in the morning, you go in the mirror, you go with all of your inspiration and your motivational speeches and everything like that to get yourself motivated to get started. And you say, hey, I want to be a boss, I want to be in business. And but that's not what it's all about. It's not just talking about being in business, it's about executing. Let's go ahead and go to the next slide. So we're going to talk about today the 5 components of credit. So the 5 C's of credit, and what you're going to need to have in order to go into the bank to actually obtain some money. Okay. So I am going to speak to you about the basics of what people talk about. You can go to the next slide, Richard, the character. I'm going to talk to you about the basics, but I'm going to break it down where you'll be able to take notes and understand exactly what it is that you need to be bankable. So the first C of the 5 C's of credit is character. So you can go to the next slide, Richard.
All right.
So when we talk about character, I like to think about this when I think about this quote here. Wealth is a product of a man's capacity to think. Who are you? And who do people say that you are? That's the same thing that banks look at. Banks want to know, you can go to the next slide, Richard. Banks want to know, who are you? When you start your business, if you are a startup, if you're in the middle of your business, if you're a seasoned business owner, there's some things that people want to know and banks want to know. They want to know who you are. So this is all of your personal stuff, because you really don't have much information as a startup on where you are as a business. So these are some of the things that I always have my clients when they come and they sit down in front of me. I want to know what everyone is saying about you, what databases are out there that are available for you to find out what everyone else is saying about you, right? So your annual credit report, you need to pull that. Most people go and say, okay, there are 3 credit bureaus. No, there are actually 4. 3 major credit bureaus, which is Equifax, Experian, and TransUnion. There's a new one out there that's sticking its head up. It's called Innovis. I put that up on the screen. And I will suggest that you guys pull every last database that's on here. Okay, you want to go to annual credit report, you're allowed 1 free credit report from annual credit report from all 3 major bureaus. Pull your Innovis. You want to go to your LexisNexis. You want to pull LexisNexis. You want to find out what early warnings has to say about you. Early warnings and check systems. Most people say, oh no, everything is fine with my checking account. Everything is fine. You know, I've never written a bad check, whatever. You want to know what check systems has because it's a database that has other information that's on there that you have no idea about. You want to go into CoreLogic. CoreLogic also under your consumer report, you want to pull that. Factor Trust, Clarity. Clarity is an Experian product, and it's a very, very intricate database as well. These databases talk about whether or not you ever applied for a payday loan. We're going to go through that. Whether or not you've applied for a payday loan. Have you gone to any of the smaller, not major, larger banks to apply for loans, some of the predatory lendings? If you have back to check systems, if you have a gun permit, if you have an aircraft, if you own a boat, if you have ever been evicted from anywhere, if you are a convicted felon, if you have ever been arrested. All of these things that I've put on here are databases that hold that type of information. And most people just think that it's all about, you know, my credit, my personal credit score, or how much money I have in the bank and everything else as far as a business owner. No, they get all of this information and they pick and choose what they're going to pull depending on what product you're going for. They pick and choose any of these little reports. So I would say, I would like for you all to have a copy of this report so you'll know what they know about you, right? And if there are any issues or discrepancies on these reports as consumers, you have the right, it's the law, to be able to challenge those things and make sure that those things are corrected, okay? So when they talk about character, this is some of the things that they want to know about you. And these are the places that they'll pull to find out what they want to find out about you. So you can't hide. We have an ultimate monthly credit report. Yeah, and some places, Julie, you do have a monthly credit report that you can pull. And there's several different companies that are allowing some of their clients and customers to go ahead and have a free credit report. And I think Equifax has been doing that because they've recently had, and this has come out in the news if it hadn't already, because I don't watch the news, but anyway, they recently had a data breach. So they'll let you guys know about that sooner or later. You can go to the next slide. So in your character, that's one of the things that, some of the things that they will pull, and some of the places that they will pull from you when you go and apply for a loan. And all of this is going to come together at a later slide. And the credit score. So most say, okay, my credit score is 750. You can go to the next slide, Richard. My credit score is 750. Okay, that's your consumer credit score, right? So FICO has something that's called liquid credit, and it's a small business scoring system. It's called the SBSS. I don't know if some of you all have heard of that. So with your consumer credit score goes from 0 to 850, right? And that's your FICO score. and Fair Isaac. I don't know who Isaac is, and sometimes he's not fair. Okay, but the Fair Isaac company owns this registered trademark here, and so it goes. Your score ranges from 0 to 300. Now, recently, during the pandemic, small businesses have been able to apply for the SBA loans, and they've relaxed a little bit on some of their requirements. But in order for you to participate and to get a small business loan, or even to get pre-screened to go through the process, you have to have 140 points on this particular scoring range, right? So here, and the better part of it, the higher your score is, the better, the easier it is for underwriting outside of this, pandemic situation that we're in right now. So this is one of the scoring modules that SBA looks at, and SBA also looks at your Experian score as well. So some of you all who have, excuse me for a moment, but some of you all who have applied for the SBA loan will see on your Experian report. If you haven't, you pull your Experian report and you'll see on your Experian report, you will see SBAA on your Experian report. So this is just another scoring module that they pull. They won't tell you about it, but they'll just pull it and they'll look and see all of the information, and they compile it, your personal credit score as well as your business credit, and they put it together and then they score you on that. Okay, the next slide, Richard. All right, and then you have your Equifax. So there are several different consumer, what we know as the big three. Two of them have a business component, right? Which is Equifax. And Equifax business score here, they compile all of this information on you. If you have any business tax liens, this is where they really get down into the nitty gritty of your business tax liens. And you can go to, I didn't put this in here, but I apologize. You can go to nav.com, and that's NAV, Nancy, Apple, Victor.com. Nav.com will give you your Experian and your Dun & Bradstreet and your Equifax, Experian, Dun & Bradstreet, and Equifax business credit report. So that's a quick one there. So also here, they also record all of your UCC filings. So if you go to PayPal, you go to some of the other, not tier 1, but tier 2 lenders or crowdfunding lenders, they will file a UCC filing on you. Okay, so that's where Equifax hones in on that. That's how they make their money, by recording all these things. So if you have a business tax liens, judgments, bankruptcies for your business, all of this is hidden there. Okay, we're going to go down, because you guys can basically read this, but I just want to touch on this. Go to the next slide, Richard. Next slide, please. Experian have their own scoring module as well, and that goes up here to from 0 to 100. Okay, and the higher the score is, the lower the risk. So they focus on risk factors. So they put in all the components as far as your history of how you pay your bills on time. It's kind of like consumer, but on a business side with risk factors. So sometimes you'll get these 1, 2, 3, 4, and 5 on your, when you pull this credit report and they say that you're at a 5, that means that you're not going to get it. 5 does not mean great on this particular scoring module. So sometimes I have a diagram that I say, okay, 5 here is, thumbs up, or, 1 here is a thumbs up. And so in Experian, a number 1 is where you want to be. Okay. Alrighty, so go to the next one there. All right, now this is Dun and Bradstreet. Everyone's like, oh my gosh, Dun and Bradstreet, this is where I need to be, blah, 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 blah. The majority of the time, businesses they don't pull Dun and Bradstreet at all. So that's why the other ones are so important, okay? But Dun and Bradstreet, let's talk about that. There is a link, I think, Richard, you sent out the link of they can click and go to find to go on with to get their Dun and Bradstreet number. If
I can
you've
put
been
that
in
in.
business, right? So if you've been in business for some period of time, you may already have a DNB number that you don't have to apply for. They've already assigned you one. So you can go to Dun and Bradstreet and you can look up your company and see if you already have a Dun and Bradstreet. Most people like freak out. They're like, oh my gosh, you know, how do I apply for a Dun and Bradstreet? They may have, you may already have one. So go there, and what you want to do is make sure that you fill out all of the information that's there that you need to have in there. You want to upload your financial statements if you're over even if you're a year old, upload your financial statements, because when a company is going in, they're going to check if they're one that checks your Dun and Bradstreet. They want to see that your profile has been completed. Take the time, take a weekend, and focus solely on your Dun and Bradstreet. While I'm talking about the Dun and Bradstreet, something that I did not put in this slide, but there are other things that you need to do if you are starting a business, you're a startup, you're in business, you've been in business for a very long time. Google your business, okay? When we go back, when we talk about character, and I'm just gonna step back really quickly, what is Google saying about your business? Okay, what is being said about your business? You want to make sure that there are positive things that are being said about your business. You want to make sure that there are reviews, that if you're in a service-based business, that your reviews are great there. If not, you want to go and speak to the person, whomever left that negative view, and find out whether or not you can make amends with that person, or find out, you know, what happened. And that's also a learning tool for you there, you know, as far as having reviews about your business. Make sure that you have a positive Google presence or internet presence when it comes down to the character. Also, there is a list of places that you need to make sure that you're registered: Yahoo Business, Google, some of the other places that I can also send back, Richard, that you can send out to them. Those are just intimate things that my clients sit down and we go over as a checklist. But when we're talking, go back to this Paydex and Dun and Bradstreet, how you pay your bills, and you can force your Paydex score, where you can't force it when you're a consumer. When you're a consumer, when you apply for something, they put it on there. If they make a mistake, you can go here and you can correct it. Here, you can put whatever you want on your business Dun and Bradstreet credit score. You can build it the way that you want to build it. You can make your Paydex score be 100. You know, Richard, if you go to the next slide, there are 5 companies that I listed, and all of this stuff you guys can read. Just pay your bills. Make sure that you pay your bills on time. Make sure you open your mail. Pay your bills on time. Every time, the sooner you pay your bills, as soon as you get your statement in the mail that you owe someone, say for instance, you go out and you get an account with Uline, which is one of the companies that are on here. As soon as they send that statement out, send them a payment before the due date. And if you continue to order from them, pay it as soon as you get the statement. You can order something from them, wait a few days, contact them, whatever that statement is, pay it, because they're going to report it. And the sooner you pay it, the higher your Paydex score is. These are some of the companies, 5 companies here that report to Dun & Bradstreet. You can also, if you're a startup company, you want to go to BBVA Compass and get a secured visa. You can go to Wells Fargo Business and do a secured MasterCard. You can put $500 on each one of them. They're going to report to Dun & Bradstreet. You can go to BP Business Solutions, get a gas card, put that on there. You can order items for your business that you may utilize at your home from Quill. So some of these places here, and also Uline, you go in there, you say, well, maybe I don't need those things, but you buy toilet paper, disinfectant wipes, all of these different things that you can buy for your business and utilize at your home, but it's helping you build your D&B at the same time. Okay, so I like to, let me touch on this really quickly too, a little tip. So say for instance, you're in a chamber of commerce or you're in an organization that have other business owners. This is an amazing way of building your Dun & Bradstreet. Dun & Bradstreet has a product called credit. I just forgot. But it's like a credit solutions where you can subscribe to them, Credit Signal or something like that. Forgot what it is. I use it all the time. I forgot what it was. But and I'm that person that was going to tell you if I forgot something, I forgot. I'm not that person that would always be like, I know every single thing, I remember everything. No, I forgot. So Dun & Bradstreet has this subscription-based service. And I learned this from a young lady who worked at Dun & Bradstreet. She told me, she said, to help your clients out, all of your business clients, to help them out, have them subscribe to the service, right? So you subscribe to the service, and it may be something, you subscribe to the service and they're going to report the trade lines that you tell them to report, to go and verify, right? So what you would do is, I will go to Charmaine. Charmaine has a business. She provides a service. She provides web services or whatever. I will do an application with her. She will extend $10,000 to me from her credit. I mean, from her company, $10,000 worth of credit to my business. She's in Dun & Bradstreet. She's in a good standing with Dun & Bradstreet. I will put on my application her company's name, her company's information, and the fact that she gave me $10,000 in credit. When they call her to verify that I have a relationship with her and the length of the time that I've had a relationship with her and that I've paid my bills on time, they will report her business trade line to my Dun & Bradstreet. Okay, so that's a trick there. And you don't have to subscribe to their credit reporting service for 5 or 6 months because it gets kind of expensive. You only have to subscribe to their service for, I would say, do it for 3 months. Once that trade line is on there, that's it. You can discontinue their services, okay? Because you have all the trade lines that you need to have in order for, the businesses that you're going to apply for business credit will be able to see that you have it on there, and it does not go away. That was one of the tips that she told me as well. So she said it does not go away. So let's go to capacity. Did you skip something, Richard? Go back. Okay. Alrighty. So the next one. All right. So let's talk about capacity. Now, when you go into the bank, and this is one of the things that I learned from a VP of a bank and the VP of underwriting. When you go into the bank, I would like for you guys to go into the bank, and I would like for you all to build a folder, right? So when you build a folder and you're going to ask for funding, imagine right now, because I don't have a folder here in my hand, but imagine you have a folder, you have the right side of the folder and the left side of the folder. The right side of your folder is going to be your personal content, okay? Everything, your personal financials. So the first thing that you put in, you're going to do this folder, you're going to put two holes at the top of each side, and you'll put a ring holder in there, a content holder. So you're going to put those in there. On the right hand side, you want to go, okay, it's called Credit Evaluator Plus. Thank you, Darlene. So the first thing that you're going to put in there is you're going to put in your 2020. If you were going into the bank right now to ask for money, your 2020 tax return, you're going to put that there in the back. That's the last thing that's going to be in the folder. The first thing that's going to be in the folder, but it's going to be the last thing that the banker is going to see. The second thing that you're going to put in the folder would be your 2019 tax returns. Then you're going to put in your last 3 bank statements. You're going to put in your last 3, the most current 3 credit bureaus. You're going to put in a resume or your CV, okay? What have you done? You're going to put in your reference letters, and then you're going to put in your business documents, which means your EIN number, your business license, if you have it, your state registration, all of those items you're going to put in there. Once you do that, then you're going to put on that cover sheet. The first thing that you're going to put on that cover sheet is the name of your business address, your EIN number. And you're going to say, why am I doing all of that? Okay. I'm sorry, not on this side. On your cover sheet on the right hand side, you're going to put your name, you're going to put your home address, you're going to put your home address, you put your social security number on there. You're going to put in also a copy of your driver's license front and back, your social security card. You have all of that inside of there, as well as a supporting documentation for the business documents that you have there. On your cover sheet, you're going to have your social security number. You're going to type that all of there, all of the pertinent information that you're going to have, which is the basic information for every single bank. At the top where they have personal information, you want to put that on the cover sheet. The reason why you want to do this, guys, is because when you walk into the bank, you need to make the banker's business easy, okay? You want to make everything, you want to give them all the information that they need. On the left-hand side, you're going to do your business financials. You're going to put all of the information that I have listed here inside of that folder. Your credit letters would be if you have a relationship with a vendor, a lender, or someone that is not reporting on Dun & Bradstreet, your Equifax, or your Experian business credit file. You want to put a reference letter in here, okay? Once you put that reference letter in there, you want them to tell how long you've been doing business with them, what has been your relationship, and a little bit more personable stuff about you as an individual on that side. Then on this side, you want to put, for your cover sheet, you want to put your business name, your business address, your EIN number, all of the pertinent information, type it out, and you want to make sure that it's in bold, okay? You want to put a copy of your business license over on this side, okay? So both sides, your personal side and your business side, and you put that in the folder. If you're going to a TD bank, for instance, I don't know if you guys have TD in California, but if you're going to a Wells Fargo, you want to color coordinate that folder for that particular bank, okay? It's a trick that they told me about. It's branding, okay? Marketing, branding. You want to make sure that you walk in there, you're dressed professionally, and I would suggest that you go into the bank prior to you putting all of this together, and you get an application, if they have an application in hand, for business or small businesses. And then you want to ask, who is the person who is the decision maker, or the closest person that you can talk to that is a decision maker. So I would suggest that you go to a small community bank if you're going in for banking, and you practice. This is a practice situation. Sometimes you're going to walk in the door and you're not going to get what you want, okay? On your cover sheet, on the business side, you're going to put in here what you're asked, okay? What is it that you need this money for? Once you get the money, regardless of what it is, guys, that you get from them, you want to take that money and you want to be very, very smart with the money. If you get $10,000, you don't want to take that $10,000 and buy radio advertisement or anything like that. You want to make sure that that money makes a footprint for you. What do you mean, Michelle, about footprint? If you have a $10,000 loan from Bank of America, and that's all that you have, okay? That's not enough for any business owner to take that money and really do anything with, but you want to make a footprint. So you get that money from Bank of America and you say, okay, Bank of America, let me establish a footprint with Wells Fargo. You take the money from Bank of America and you make a deposit into Wells Fargo. Okay, now you have two banking relationships. You can take that money, you have another account, okay, say at a small credit union that you have a small product with, or you have a secured, that you want to do a secured loan or some type of security that you have over at the small credit union. You want to set that on automatic deduction and come and bring that money out of Wells Fargo into that community bank, okay? And you're going to circulate, so you're going to make a footprint. You're never going to take any money out of the bank. You understand? You guys getting it? If you're in the chat, let me see the chat here. You're creating documentation, okay, and relationships, and then you pay that loan back within 3 to 4 months. The first loan that you got, okay, you say, repeat it, please. If you get $10,000 from Bank of America, you take that $10,000, you're going to pull it out of Bank of America, all right, and you're going to deposit that money into Wells Fargo. Exactly, Julie, you get it. Creating relationships, exactly. You're going to deposit into Wells Fargo, okay? You're just creating footprints with that amount of money. Then you can send that money, you can create a product that you have to pay monthly at a credit union. And you take the money from Wells Fargo, you put that money on automatic deduction, and you send it to the credit union. Now you've created 3 relationships with one $10,000. And then you take the relationship, the money that you receive from Bank of America, that's now in the credit union. Remember, we circled it around. It's in the credit union. You're going to pay it back to pay it back to Bank of America. Okay. You've created 3 types of relationships. Now you can go in at your 6th. Okay. So now you can go in as month 6, because you've established 6 months of relationship, and then really ask them for some more money. You can ask Bank of America for some more money because you didn't use the money. You're not struggling, because banks are the only places that will give you money when you show them that you don't need it. We cannot look like a small business. You have to look like a Fortune 500 company. So if you're starting up in business, if you're in business right now, or if you've been in business for such a long period of time, you want to make sure that you've created relationships, that you've created relationships and you've documented your relationships financially, okay? One of the things that I'm going to talk about, go back in and we talk about capital, is also on that personal side of the folder. If you have a life insurance policy, you want to put that over there to establish that you have a life insurance policy. If you have key man insurance and you have a partnership, or you have any other types of insurances, that's where those items will go when we talk about capital, of what it is that you have. Capital is spelled wrong. You can change that slide. What it is that you have in order to back up this loan, which goes into it will segue into our collateral. What is it that you have that if the bank say you defaulted on this loan, where can we go to get our money? And that is with insurance. And that's the reason why I wanted Francis to talk about the insurance component first, so you guys will understand why that is so important. And one of the other questions that I know Charmaine asked me to touch on is, the majority of the time in our community, we want to know, why is it that why should I go to the bank and ask for money when I really don't need it? I want to, what do they call it? Front my own money, or bootstrap my own, bootstrap my own business. No, that is okay. That is so crazy. You don't ever want to, thank you. So, yep, you're absolutely right, Jude. They give money to people who don't need it, and the people who show them that they don't need it. You never want to try to bootstrap your own business, because you have to separate. And this is so important. You have to be able to separate and show separation of funds. You cannot commingle your funds, okay? It is so important to not commingle your funds. Have a separate bank account. When you start your business, or if you're in business, or you're a seasoned business holder and you don't have an accountant, you're not in business. You don't want, your accountant will tell you specifically, do not commingle your funds. Don't put your business money in with your personal money. Do not run your personal life and household out of your business. Why? Because when they ask you for those bank statements, you don't need them to see you went to McDonald's. That's not a business owner move, okay? You're going to, to the movies, and that's not a business expense. When they look at your bank statements, they need to see things like your business bank, your business credit cards, that you've paid your business credit cards off. Okay. Another thing is, if you're in business and you haven't done this right and you would like to work with me, then I'm available. My email address is there. I can help you undo some of the mistakes, because like I said, the reason why I have such great information is because I failed miserably, okay? And there was no one that I could reach out to and ask them to help me, to assist me, to tell me what I was doing wrong, because they didn't know. They were doing it wrong too. And some of those people are my clients right now. They've been doing it wrong for such a long period of time, and they've been bootstrapping their business. They're struggling. And when you're in business, business is not for the struggle. It's not to struggle at all. You want to make sure, business is to make sure that you have time freedom. And if you're in a business that's sucking up your energy, sucking up your time, sucking up your resources, you have to start over. And I don't care if you're in year 5, year 15, year 20. Let's get together, revamp all of this, and make sure that what you're doing is the right way. Okay. When you walk into the bank, I don't like the bank turning my clients down. So I make sure that they have everything that they need, and they're doing everything that they possibly need to do in order to get the funds that they need to get. Okay. So I know there's a lot of information, but I hope that I was able to add some light or share some light on some of the things that you guys had never heard of before, because I know that there's a lot of information that's out there. It's a lot of hidden information that's out there. And I hope that I was able to bring that to the forefront for you. So if you would like to work with me, my information is there. I know that there may be some questions and answers. I mean, some questions that are in the chat that we need to go over and get some answers for you. So are there any questions that you all have?
And Michelle, before we get to some of those, because we did have a few, I'm gonna try to get through my slides. The information that we are providing today is amazing. I just want to first and foremost thank you two ladies for the information that you're providing, the fact that you're willing to continue this effort and support these folks that are here. Those that are not here that will pick up this video feed that we'll be passing out with the decks. I hope they will also find the need to reach out to you. You hit so many points, and I was writing notes. I almost wrote a book, and I just wanted to interject so many times to kind of reiterate stuff, but this is just more of a reason to know that we got to continue to do this, and you all have to continue to come get this information. Unfortunately, a lot of times we're just too busy to do the things that may be tedious or time consuming, but it's going to support our growth. Right? We don't know what we don't know. And
Right.
Nana Kofienti in his first session talked about mindset. And what you talked about was those pains that you go through when your business is just sucking up all your energy and all your resources. You know, it is a time to go meet with a Michelle or another consultant. Come see Main Street Lines. Let's figure out if your business model makes sense anymore. With
Mhm.
COVID happening right now, a lot of businesses need to start pivoting, but they're just too scared because we don't know what we don't know. And you're not wasting money when you go out and get a CPA, an accountant, or a consultant like Michelle, or an insurance agent like Francis. Come see Main Street Lawn. That is reinvesting in yourself. All right. So when you pay and you get these resources on your team, and you yourself continue to build your business acumen, that's only going to generate more wealth, which is then going to generate intergenerational wealth. Okay. So thank you so much for that, Michelle. I had my pre-stated transitions. So because we switched the order, I'm just going to go through it. So bear with me, you guys. And we have about 10 more minutes. We have a 4-minute video that's going to go over entity types, because I know that's a huge, huge, huge issue. If I guess I call it issue, or just misconception on which one is right. Right. A lot of us are staying in these sole proprietorships when we should be corporations, or S corp, or C corps, or limited partners, or what have you. So that's going to be a 4-minute video. And before that, I want to go over the capital ladder. We talk about the loan packet. This workshop series is hopefully stacking information. So as each workshop continues on, you get more and more, your business acumen levels increases. Okay. So when we start using verbiage without stopping to define it, you can follow along with it. You know what account receivable is, or AR, right? And you know what Duns& Bradstreet does now. So anytime you hear Duns& Bradstreet, you understand the importance of it. So that's what we're hoping that you're gaining from this workshop. I hope you can stay on with this for about 15 more minutes, to be honest, about 15 more minutes. And if you can't, I'm going to be sending all this stuff out right afterwards, most likely Monday. So we just went over some very important information on how to prepare a loan package and best practices around ensuring you are well informed of your needs and financial situation before entering a bank requesting financing. Right, have that folder and make sure it's the same color. Don't go in with a blue and red folder when you're going to Wells Fargo. They might think you're coming from Bank of America. Just an example. Not saying anyone's better. That was just only an example. But nonetheless, this workshop is titled "Bringing It All Together," as we hope those who have been with us over the last 3 weeks, and those who may have joined us for the first time today, have gained a better understanding of business finances. We started the series off with a conversation about mindset, where Nana Kofienti with 510 Media spoke about the importance of not internalizing your business financial situation. Don't take it personal. Okay. Don't and because a lot of times we internalize it, we don't want to look at our numbers. Right. We don't want to do our due diligence and making sure that we know exactly where we are as a business owner. And taking it personal, but rather see new challenges as opportunity for growth. Right? Michelle just talked about, she learned most of this stuff by making her own mistakes. Okay. And that's not a failure. Each time she was let down, or she hit a barrier or a roadblock, that was opportunity for growth. Now she wasn't going to go down that path anymore. Right. And she can continue to support others with that information. Like a top tier athlete or performer, you can never stop training and practicing your craft because you have reached the title of business owner or entrepreneur. We love to put those titles out on our LinkedIn pages, right? It makes us feel good. But that doesn't mean you stop learning, right? So for you all that are still hanging around and a part of these workshop series, bettering your understanding on business, congratulations to you. When things get uncomfortable, don't run away from the challenge. See it as an opportunity to be better and reassurance you're going in the right direction. Nana was joined by Kiara Taylor with Nomadics. Kiara discussed the need to know your number and talk the talk. We just continue to reiterate these things in different avenues, right? In different frequencies, in different ways. But you can't go into a bank and you ask the banker, or you tell the banker you're here for a loan. They say, how much do you need? And you say, how much can I get? That is not going to be a good relationship or a good initial introduction of yourself. Okay. The first impression is not going to be good. And business bankers, what they do when they underwrite your loan, it's not a black and white loan. They had to write what's called a credit memo. They had to tell a story about you, right? Why this expense is on 2018 financials and 2019 financials. What are you as a business owner trying to do with this money? Is this loan either going to just help you build a relationship, help get your foot in the door? So, I wrote in the chat, you can't go for 50 if you haven't got 10 yet in most cases, right? So what Michelle was going over, she didn't get a chance to dive in. It's one of those things that I love, personal finance and understanding credit. You might have to pay to play sometimes. All right, a secure credit card is a great entry point into getting your business recognized by these credit bureaus and other agencies. All right, you got to think end in mind. Um, so as our panelist Michelle just reiterated, which I just talked about. So during our second workshop, we were joined by Tracy Tate, CEO of TOJ Financial Services, and Tammy Willis, CEO of Shoebox Financial, where we dove into 3 financial statements and covered 11 tips for organizing financial records. Again, we are reiterating these things again. Make sure you have that packet. Make sure you have your financials and you have those bank statements. And when they open up those bank statements, they don't see McDonald's, Burger King, a new pair of Nikes. You know, that is not a business. You're think of it like this: when you have a business, it's his own person. So when you go in there and buy stuff that is not business related, you just went over to a stranger's pocket down the street and took money from them. Okay, and you didn't even tell your bank where you got it from, right? It's just a mess. It's just a mess. So leave your business alone, your personal finance separate. Okay. I know it's hard. A lot of times we have these businesses to fulfill a lifestyle. We're not really running our business to scale and to grow. We need this business to support our lifestyle, right? And usually those bank accounts for those type of business owners. I'm a branch manager in my pastime. I know how those look. All right. So, but that's across the gamut. $10 and millionaires. Your bank account is going to look the same if you make the same silly mistakes. So now with all the aforementioned cover, let's move to where, right? We're keep talking when you go into these financial institutions, where you go financing, right? Based on the stage of your business. Now, using this capital continuum chart created by Kiva, which is the crowdsourcing lending institution, let's review some misconceptions about how one can access capital as well as the many different sources of capital. Now, this capital ladder is not the black and white, the Bible of when you go to find capital, where you go to find capital, but it is a good, solid foundation for you to understand. So when you're a brand new business, pre-revenue stage, you can't go into the Wells Fargo Bank of America and ask for $150,000. You have no revenues, right? But there's other financial institutions that are willing to do that, all right, and other sources of capital that can help you with that. So first, let's make sure all know that there is a difference between traditional and non-traditional lenders. Okay. Two of the main differences between traditional and non-traditional lenders is who they will loan money to based on risk and how quickly they will get the money to you. Traditional banks are pretty risk averse and focus primarily on offering conventional loans. They base their loan decisions off your payment history, your credit score, cash flow history, and projected earnings. They also tend to feel more comfortable when you have collateral to pledge against and any money you borrow. For new businesses, this can be problematic, hence the recurring use of the term history. You need a loan to make all of these things possible in the first place, okay? So where do you go then? That's when you look at organizations like Main Street Alliance, right? Non-traditional lenders, on the other hand, assume most of the risk. They are more open to businesses with poor or non-existing credit, and generally have options for those with bad credit scores, making it easier for businesses with little to no history to obtain cash. Non-traditional lenders are also able to navigate around issues such as bankruptcy, rarely, but it is an option where traditional banks is an automatic no. Tax liens, negative balances, and smaller deposit frequency with ease, which is something banks don't usually accept with their underwriting guidelines. Examples of traditional banks are those that are heavily regulated by the Federal Reserve System, such as the Wells Fargo's, the Chase, the Banks of America. And As you can see here, let me see if I have my pointer still here. 1 second, you guys. So convention, the traditional lenders sit here at the top. Okay, they're looking to lend to stable businesses. Stable businesses can come in the form of a business that's been around for more than 2 years. That's the basic, right out the gate definition. You can get a loan from a traditional bank with a year's worth of being in business with revenues, and you're projecting great profits, but it's much harder to do so. Okay, they do lines of credit, terms of loans, term loans, asset-based loans, and construction loans. In essence, the time I won't go drill down on every single piece, but you can have this chart. Um, let's see here, and then examples of non-traditional financial institutions start down here. When you first start out, you can't go to a bank most of the time, so you're going to have to ask what most of us call the 3 F's: friends, families. The last F we're going to keep out, right? Rhymes with tools, but personal savings, credit cards, home equity lines of credit. You are believing in yourself. You're betting on yourself. You know what? I'm not here to recommend you do this. Okay. Cost of capital. We don't have enough time to talk about that, but look it up. Cost of capital. Okay. Can you repay this debt back? Right. If you borrow from yourself, you do a cash event. I'm not sure what you do, but this is where those early stages. You need some money to buy that initial inventory, to buy your business cards, to even get the business license, your fictitious business name. You're going to need some of that seed money. Then it goes up to friends and family here. Alternative institutional lenders. That could be considered a Kiva type of business, which is a crowdsourced lending financial institution, which is Francis Michelle Shemaine. We see this business owner on this crowdsourced funding site called Kiva, and you're like, you know what? I want to support them. I'm going to shoot $1,000 for their desired. It's almost like a GoFundMe for businesses, right? So, but it's attached to somewhat of a loan term, okay? And factoring companies now, merchant cash advance lenders, everyone has a situation, but if it was me, I would never ever recommend you do that. We don't have to go into details, but how that works is your POS system, your Square machine, your Apple Pay machine, your merchant machine. You know, every time if something costs $10, you know, maybe $5.60 is going to them. Okay, and sometimes even worse. So you're losing all your money up the front. That is a dire situation, but I'm hoping none of us are here. Michelle, I know you want to chime in on that one.
Absolutely. There's should never be a reason why you would go to a merchant
Yes.
event. That's like going to a
Check
payday
cash.
loan,
Hmm.
right? And a check cash in place to get a payday loan for an emergency. Borrow the money from your friend or
Yes.
your family member, but don't do that,
Yes.
please.
Yes. So let's see here. So and then we're moving on up here to alternative community lenders. This is more of that true standard non-traditional institution. Okay. You have your micro lenders, California Capital, you have a few in the Bay Area, other community banks, uh, the SBA, right? SBA partners with traditional banks and non-traditional banks, but SBA supports non-traditional banks by guaranteeing loans up to 80, sometimes 85%. Meaning, if you had $100,000 loan, that institution is supported upwards of 80 to 85,000 minus your legal fees. So that way, we can go ahead and we, as a non-traditional institution, gentlemen here with Main Street Launch, we do provide loans. Um, we can take a little bit more risk, okay? And then we already talked about conventional loans. So, and just to make sure everyone knows what a CDFI is, it's a community development financial institution, or also considered a community development finance institution. It provides credit and financial service to underserved markets and populations that have historically been locked out of the financial system. We don't need to go into depth about that, but this is why the type of lending institution like Main Street Alliance exists. Moreover, CDFIs emphasize developing long-term relationship with members of the community to help them gain financial literacy, establish savings goals, build credit, and if you are a CDFI like Main Street Launch, hold workshop series with the National Black Coalition titled Business Finance 102. So we're doing our part here. Now there are some cons. I have them in quotations in my notes, right? They're cons, but about non-traditional lenders in the sense that underwriting processes can take much longer for new businesses under 2 years. You may be, but we are willing to give you a startup loan, acquisition loan, and expansion loan, and maybe requested to provide a business plan. So you might have to show us a business plan. You have to remember, even when the bank gives you an unsecured loan, meaning no collateral was necessary, they're basing it on a risk factor that they have in their underwriting guidelines. Your debt service coverage if they're a cash flow lender, right? They want to see your current debt obligations versus your assets, right? They want to see many different ratios. If you heavy inventory, your turnover ratio on inventory. Um, for a startup company, what do you have? So your business plan has to be nice and clean. And that business plan is going to be on that packet when you go get lending. When you come see a Main Street launch, let's make sure you have that business plan. It's going to be on the right side of your packet. I believe it was the left side. You can correct me, Michelle, but it was on one of the sides, right? But you want to add that business plan because you're going to have to prove to me as a lender that your business idea is going to sustain itself, right? It's going to be a winner. You're going to be able to service this debt. I'm giving you this money because I believe in what you wrote on this business plan. You can't open up a restaurant because all your family members like your pies. That doesn't mean people are going to come eat those pies. Okay. So we have to understand that, but it's a good telltale sign. Go to those, go to those outside events and then do a pop up and see how many people come to your tent, right, and buy that pie, and how many returning customers come. That will let you know if you should try to take a leap out, right, and start small. So let's see here. So okay, so now we pretty much cover everything you need to know about business loan packages and where and how to access capital. There's a lot more in these crevices, but hopefully you gained a good understanding based on the three presentations that have gone thus far. But there is still another question I'm sure many of you have, and it always pops up. Or if you're a consultant or a TA provider, you try to support these business owners with understanding they might need to change their entity type. This question and your ultimate decision also can and usually does dictate which type of loan you may qualify for, whether it be with a traditional or non-traditional financial institution. A sole proprietor is pretty much a person, or you can have an EIN number, but it's based on your personal credit. You have not separated yourself as an entity per se. You can have your fictitious business name, which DBA, but you're going to be Richard Morris DBA, uh, a travel company, because I love to travel, right? So that's what happens, right? So to help us with this, we're going to end with this one here, and before our Q&A, and this is going to be a 4.5 minute video by Mr. Jasper Smith. He's also known as Mr. Build Your Wealth. I need to tell him I'm using it, but he made it for our organization, so we can use it anyway. But nonetheless, I love this video because it just cuts right through, right? So based on this video, you can find this and many other videos for your business efforts on our Main Street Launch YouTube. Okay. So to help you start thinking about which entity type is best for you, we will watch a brief 4 minute video by Joshua Smith, founder of Build Wealth Movement, also known as Mr. Build Your Wealth. He's also an author, so look him up. He's a great young man doing a lot of great things, and he's focused on your personal wealth. Okay. This video can be found again on our YouTube, and I'm going to try to play this for us right now. So if you have some headphones, turn them up and enjoy this video as soon as I find it for us.
So I'm Jasper Smith, also known as Mr. Build Wealth. And you can think of me as a financial concierge. And all I do is turn people into financial rock stars. So the business structure that an entrepreneur selects influences everything from the day-to-day operations to taxes to how much of your personal assets are at risk. It can also influence your plans for expansion, exit, and investor strategies. You should choose a business structure that gives you not only the right balance of legal protection, but also the benefits. So there's really four common business structures that I see quite a bit in the marketplace. And I'll kind of give a high level overview of each one. The first, and which typically tends to be the most popular, is the sole proprietorship. You have partnerships, you have corporations, and you also have LLCs, or limited liability companies. So if we start with the sole proprietor, that's the easiest one. If you, let's say you're a business owner who is, I'm just starting out, it's kind of a low risk business, I want to test things out, but might make sense for you to consider being a sole proprietor, because then you're able to make all the key decisions as it relates to the business. The drawback is the business assets, the business liabilities are not separate from your personal assets and personal liabilities. Another popular business structure is the partnership. So now it could be you and a friend. Now, there are two primary types of partnerships. There's a limited partnership and a limited liability partnership. With the limited partnership, which is sometimes called an LP, you have what's called a general partner. So the general partner has unlimited liability in the business. They also have the responsibility, or maybe a lot more control than the other partner. And they're also responsible for paying the self-employment taxes. The other partner, they're going to be the limited partner, and they have limited liability in the actual business itself, and they also don't have as much control as the general partner. The LLP might make more sense for somebody who says, hey, all of the partners coming to the table are bringing the same level of expertise, the same level of commitment, and also financial backing. Next up is corporations. Generally speaking, a corporation is a completely separate entity. Upfront costs to start are a lot higher than your sole props and your partnerships or your LLCs. And a corporation needs to keep really good records at all times. And there are really two primary types. There are S Corps and C Corps. The C Corp has that potential for double taxation. The S Corp doesn't have that same drawback. Now, an S Corp, it can only have 100 shareholders, and all of the shareholders have to be US citizens. So the C Corp doesn't have those same parameters. Also with an S Corp, profits and some losses can pass through to the actual business owners. If you think about a C Corp, totally separate from the individuals who may start it. The corporation makes profit. The corporation pays taxes. The corporation can be sued. So you may be asking yourself, which corporation makes more sense? Typically, you'll see people start out as an S Corp because they may not foresee themselves growing exponentially or going public at some point. But for a C Corp, this is the company that knows they want to go public and they want to sell this thing off. So you got to think about the growth outlook or growth perspectives with your business, and that'll help you to determine which corporation makes the most sense for you. The final category is an LLC, or a limited liability company. So an LLC gives you some benefits of a corporation, but also the partnership. Profits and losses also pass through to the actual owners of the company. LLCs are taxed differently from corporations. If the business is actually sued, the owner's personal assets are protected. So we've covered the four common types of business structures, but again, the real decision is up to you. There are a lot of things to consider as you structure your business. You got to think about who's in control, the liability, how you will be affected by taxes if you're considering growth and want to issue stock. So there are a lot of considerations you want to make, which will dictate which is the best structure for you. And so if you're not 100% sure on where to start, there are a ton of resources that exist, one being the Small Business Administration. They have a ton of great information and resources to help you to decide how you want to structure your business. And what I would also say is, it's okay, no matter where you start, you can always change it. So just keep that in mind.
All right. So, Mr. Jasper Smith, Mr. Build Your Wealth. I hope you all, enjoyed that short video. Again, I believe Shemaine had posted the link to that video on the chat, as well as our next workshop. Here, let's see here. So I'm going to read this. Miss Francis went first, but it was a great transition into next week's workshop. Today's a sad day. My co-hosts for the first three workshops are going to be working and supporting us on the back end. But we are going to continue on and transition just a little bit, right? They're going to be on the back end helping us out, but we're going to be moving away from the loan and business finance side to talk about what do you do if you were to sell your business? How much would you sell that business for? Okay. And in time of COVID, there's a lot of businesses for sale right now that are below market, which could be called a value business or like a value stock, right? It's on a discount. But what tools do you use to evaluate a business? You know, how do you figure out how much your business is actually worth? And when we start businesses, we always think about, especially if it's a lifestyle business I talked about earlier, how much money can I make, right, to live this lifestyle? I want to drive this Mercedes, I want to get all this house, but not really thinking about scaling. Or you're starting a business because you're very passionate about what you do. All right. But how many of you think with the end in mind? So Jasper just talked about something towards the end of that video, and he couldn't tell you what business entity type to go with. It's up to you. All right. If you want to scale and be acquired, right? If you want to scale through another source of revenue, capital, which is equity, right? Investors, right? You're going to need to be a corporation. Okay. And then depending upon all these different choices, it's going to directly affect the valuation of your business. So by thinking with the end in mind, you know, we're going to go over 4 C's here. Let me get down here and talk about this. Let's see here. So during this workshop, we'll be focused. Let's see. Today we focus on protecting our business assets through the various insurance vehicles. Okay, that's what Miss Francis went over earlier, and policies, which is a great segue into our next chapter of workshops, which begins next week on the topic of succession planning and exit planning. During this workshop, we'll be focused on what we need to do as business owners to not only sustain and scale our business, but how we go about ensuring generational wealth transfer by always thinking with the end in mind. We'll also cover what we should do to protect our assets from Uncle Sam when one decides or plans a liquidity event. And there's many different ways of going about that liquidity event. I don't want to work forever. I'm sure no one on this workshop, nor anyone that's going to watch this workshop, or anyone doesn't want to work forever. Okay. But you got to have a plan. Without a plan, I'm working on this trademark, so don't use it. You're a feather in the wind. Without a plan, you're a feather in the wind. You're just going to just go all around and around. Okay. You got to know your numbers. You got to talk the talk. You got to be prepared with the packet. You got to protect your assets in your business. We are hitting all these key components on every single one of these workshops, and we hope that you're following. If you missed the first two, go back and watch them. Okay. Because this stuff is building, and now we're transitioning into protecting the assets and protecting the money that we're needing to utilize, especially in our community, for intergenerational wealth transfer. We can't continue to start over every generation. Okay. So here is, let me see here. So the fourth workshop is titled Succession Planning. Will cover the what and the how regarding ways to increase your business value and protect your assets as both a business owner and individual, with the focus being intergenerational wealth transfer. So we're hoping the link is in the chat. We hope that you join us for this session. We have Mr. Michael Ballstad with Harvest Transition Solution. He's a certified exit planner, right? He's a licensed. All he does is support businesses with preparing for their exit strategy. And guess where you start that? Day one. You have it in mind, because depending if you're going to sell it, be acquired, pass it on to your heirs, or just let it dissolve. Knowing what you're leaning towards is going to help you make decisions on day one on how to go about building out and moving along in your business. Okay. So the registration link is here. The workshop is going to cover things like who will take over. Who do you have planned to take over? Remember, I said 98% of business owners in the African American community have one or less employee. We're working in our business, not on our business. Okay. So this is huge, especially if you're the breadwinner for your family. Who's going to carry that legacy on? How long will it take to transition to ownership? What procedures need to be passed on? Is selling the business an option? What steps are to be taken for a successful liquidity event to occur? Review of historical transition success rates, meaning how many businesses go from first generation to second generation to third generations. And then ensuring the transfer of intergenerational wealth with trust and wills. Now, this piece could be for a business owner or anyone that wants to know more about trust and wills, because we're going to cover that. Because, okay, we sold this business. What am I going to do with all this money? You know, I did well. I sold my business at 45. I'm at least 45 years left to live. I'm going for 90. How am I going to leverage this money that I just got from this business sale to live out the rest of my life if that's what I choose? You got to have a plan. You had to talk to an estate and trust attorney. So Control Smith, who's a senior wealth advisor at Wells Fargo, is going to be joining us as well. So we hope that you guys join us next week. And that's going to be followed up by our supplier diversity, developing the supplier part 1 and 2. With that, I know we're way over. If those are, I'm not sure if anyone's willing to answer any questions, ladies. We had just a few that were really pressing. Maybe just choose 2. Okay, I'm gonna choose 2.
So Richard,
Yes.
hold on one second. Ladies, we have the Q&A is on fire. We have 6 questions. Can you guys give us like just a few more minutes so we can make sure that, you know, for the people that just stayed on, we can get
Yes.
their questions answered?
Let's go with these first. Let's go with
yeah.
these first. These Q&As.
All right. So Richard, do you want me to just go ahead and do it?
We can go back and forth. You can start it off. Yeah.
Perfect. So regarding workman's comp, I'm assuming WC means workers
Yes.
compensation. What if you're a C corporation and you are on the payroll, Francis?
I'm sorry. The question was, what if you're a C Corp and you're on the payroll?
Yes.
There's a couple of things that you can do. Whoever's asking that question, maybe they could call me directly and I can get into that with them. But there are, let me just say, most private insurance companies don't cover the business owner. Okay. But the state of California has a state fund and they have a state fund for workers' comp. That might be something that this individual might want to consider if they want to include themselves.
And thank you, because that was a good one. That was a really good question, you know. So I also looked it up myself because, and you had the right answer, Francis. That's a conversation that you're going to have because there's so many different things that's going to dictate that answer, right? But there's a few bullet points. Is a new law that just passed in 2019, specifically for California, I believe, as you were just highlighting. A director or officer owned that a director or officer own at least 15% of the corporation stock in order to opt out of workers' compensation. Right, they have an option to opt out of workers' compensation. Right. That with the 15% ownership requirement, no more than 6 people can be excluded. That the director or member sign a waiver stating they are qualifying member or officer. That the waiver remains in effect until the insurance company receives a written withdrawal. That a managing member of a limited liability company or general partner of a partnership sign a waiver to opt out. So it sounds like go talk to Francis and let her hear your situation. Right. What is the makeup of your ownership of your business? So then we can give you the correct answer. But thank you so much for that question. It was a really good one. And I think, so if you have an LLC that holds multiple properties, do you need business insurance or does homeowners insurance cover you? I would like to answer. Oh, go ahead, Francis.
So as the licensed insurance agent, I'll respond to that. Yep. Your homeowner's insurance only covers your home. It does not cover business property. So you want to think about there's a couple of different things. If you own property and you're the landlord, that's called landlord insurance. Okay. Your homeowner insurance only covers the home you live in. It doesn't cover any of your other insurance. So there's different types of insurance. If you want a free consultation, book it, and I'll be able to explain that to you as well.
And I dropped your information in the chat again, Francis.
Thank you. Okay.
So I'm going to skip down to a question for Michelle.
Excellent.
Could you take your EIDL and create a footprint? If so, how?
The same way that I explained. Yes, you can. The same way that I explained. EDIL is a loan. It's just as if whomever you got it from, or if it was a bank loan, it's the same thing. It's just funds that you're able to use. And so once you're finished utilizing and creating a footprint, then you go ahead and pay that back. So yes, you can, Julie.
And thank you for that, Michelle. And there's a question at the bottom. I'm not going to tell you insurance advice. I was once licensed, but dropped my license. So Francis is going to take it. But this is a personal one. I'm uninsurable, as I stated. My wife is preferred premium plus. Right. And yes, to answer your question, her question was, if I just receive a premium plus insurance rating and my partner has health issues, can my excellent rating help to lower his premium costs? And my answer to that is, for me, I couldn't even get the insurance. But Francis brought up something that you call her and get more consultation, which was, I believe it was the help me out here, the portable
So
insurance
there,
policy.
yes. So
Yes, the
we can
portable
talk
insurance
about
policy.
because you know insurance is based on the individual, and
Yes,
and they look at pre-existing health issues.
yes.
However, there are companies that will cover pre-existing serious health issues. And so again, it depends on what it is. It depends on the person, how old you are. I can sit and talk with somebody about that as well. That
And what your
includes you,
ultimate
Richard.
goal is, right? What's your ultimate goal?
Exactly.
So we have another one. How do you pay yourself and keep your business finances separate?
Michelle?
Okay. Uh, Well, okay, there you go.
Go, go.
Yeah,
Okay.
I'll go ahead, ladies first.
Go
Always.
ahead. Go. No, go ahead, Richard.
So I was just going to say, this is a really good question.
Yeah.
I just want to just make a statement, and I'm gonna let Michelle kind of answer. The statement is, understand that don't commingle. And an example of commingling is taking money out, just withdrawing it. What is this money for? When you go get a loan and they look at your bank statement, you have all these withdrawals at the ATM or this money. That's an owner's draw. Okay. And that's something that you need to make sure. And if you're going to pay yourself as an employee, that's a specific entity type that you need to be in. You can't pay yourself as an employee if you're a sole prop or even an LLC. So you can take draws, right? An owner's draw is you taking money from the profits. You can put yourself in a negative because by taking draws and that year that creates a loss for you, then that loss is going to carry over to your retained earnings, which is a telltale sign on the health of your business. Okay. So paying yourself, you that's a thank you, but just be careful how you do it and understand that before you meet with me about business, we're talking about personal finances. And I'm going to ask you, how much does your life cost? That's the first metric we got to meet as a business, correct? And based on that, how much are you forecasting that your business is going to generate? So then you can try to, reconcile and allocate that amount of money that you need. But I'll let Michelle go ahead and elaborate on that.
Well, thank you, Richard, for that. And I think that you touched on a great point there. You don't want to commingle. So if you are in business and you have business revenue, and that business revenue, I would suggest that you take a look at what you've made the last 6 months. If you want to start putting yourself on payroll, you need to get a payroll company, and then you need to decide how much you want to pay yourself. And so in that business bank account, when you have your profits or whatever you're pulling your money from, you want to make sure that that money goes into the business bank account. Whenever you sit down with your payroll company, whomever that may be, ADP, Paychecks, or whomever you're going to have for your payroll service, then they're going to automatically deduct that money out of your payroll, right? Out of your business bank account. That's going to come to you as an individual, okay? And when it comes to you as an individual, you want to make sure that you deposit that money into your personal bank account. And if you want to contact me, I can really tell you in depth how you do that, okay? But you want to contact a payroll service because, yeah, contact a payroll service. Contact me. I'll tell you how you do that, and you will still be profitable in your business with income, personal income to yourself, and a show of profit, and paying your taxes that you need to pay to the government and the state. Okay.
Thank you for that, Michelle. Yes, and I'm hoping that is answering all of your questions. There, every dollar needs a house. That's another one of my. I'm going to trademark that, guys. But every dollar needs a house. So when you're pulling all this money out, guess what? Your accounting system, if you have one, you're going to have to tell the bank or the institution what was this transaction,
Right.
right? What is this? So if you have 100, it's onlys, another one. those $5, $6, it's only $6, it's only $8, it's only $20. You're going to have to answer to all that, and don't connect it to a QuickBooks. That's going to be a mess. So the best thing to do is meet with the professionals, learn, teach yourself. Main Street Launch has services for you that can support you, and that's what we're here for, you know. And thank you for being a part of this workshop, friends. I want to ask this question. I'm not sure you want to answer it now or just ask Julie, because this one came earlier, and I think it's a really, really important question. We're going to end it with this one. It was. Let me not lose it. I am so sorry. Are premiums taxed to the covered owner or partner? So I didn't really understand exactly what she was inquiring about, but that one came in through the chat earlier in your presentation. So are premiums taxed to the covered owner or the partner?
So it depends on how you have this set up. And because I have a tax license, I can kind of talk a little bit. It depends on how you set this up. So if you set it up in your name, then, but if you set it up in the company's name, that's totally different. So it's going to be based on how you set this up. You're asking about a business expense, I think. And so the business expense is going to depend on what the setup is. But that's certainly something that I can talk with you about. When you say, are they taxed? I think the question is this a tax write-off for the business? So I think that's what they're trying to ask, because there is no tax on insurance. But if you're asking if it's a tax write-off, it's going to be, yes, it can be a tax write-off depending on how you have it set up.
You know what? Thank you.
Because it's a business expense for the partners as well. So that's certainly something that's a very good question.
Ladies, thank you so much. It just has been a pleasure, these first 3 workshops. I appreciate your continued support, even though we won't have you on camera moving forward. But it's just been a pleasure. And I hope all those that did show up, that will watch it later and that hung around to this point and got some really good nuggets in this last bit of time throughout the workshop. We just want to thank you. All right. And we just hope that you continue to join us and educating yourself. And you have to invest in yourself, right? Investing in yourself is getting this information, but most importantly, applying it. You know, don't let these workshops just go in one ear and out the other and say that was really good information. Don't act on it. All right. We as a community need to continue to excel and switch the directory that we're on. Right now, Black businesses make 10x less than white business owners.
Yes, they do.
In wealth. Okay. Wealth.
Yes.
And outside of home ownership, it's business ownership in which we're going to move forward to close the racial wealth gap. And that's for all backgrounds, all right, and education and social statuses. Okay, let's invest in ourselves. Thank you all for coming. We had the registration link in the chat. We had the survey link in the chat, and we also had the link to the video by Mr. Jasper in the chat. I am going to be sending out all the decks and the recording of this workshop by Monday. And we just wish you all the best, and you all have a great day.
Thank you. Thank you.
Thank you.
Thank you.